Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Friday, September the 8th, 2017. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market, macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses. We do create multiple hypotheses in order to have a plan in place. We do not know what the market's going to do. We simply have a plan based on the normal auction in multiple scenarios, and then we wait for the market to show us what it's doing, and then we execute the plan that best suits the market. Please read through this disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. If you're interested in checking the room out, send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog. It's not a commercial venture. We do everything live here in the pre-market, and then we do live trading and analysis during the regular trading hours. All right, so taking a look at yesterday. We were anticipating some responsive selling down into the 63 to 58 area, and then find buyers to rotate us up back towards that 69. That was our key target for the day. Hypo 2 was a failure to break out and rotation down, fight the 60 area, and then fail and come down into the 53. Hypo 3 was a open test drive up. Hypo 4 was failure. The alternative hypo was an inside day. This day right here on Wednesday was inside of Tuesday, and we had an alternative hypo because of the inside day of getting another inside day, and you can see that we did not break the high or the low of the prior day. In fact, I can bring that up just to give you a better idea. So there's Tuesday's hypo, or Tuesday's profile. We had inside day on Wednesday and inside day on yesterday. It's not showing inside because of the fact that I'm showing my Globex, which is the wrong chart. Sorry about that. There's Tuesday, there's Wednesday inside, and Thursday inside. We did not expect a lot of range yesterday. We ended up getting 9.25 points, so smaller than the 20-period average true range. If we take a look at the macro to micro, let's take a look at the news first. We got a whole bunch of speakers today. We have Harker speaking now. 10 o'clock, we've got wholesale inventories. 10:30, we've got ECRI. 1 o'clock, we've got Baker Hughes. But there's a bunch of other speakers that are speaking today as well that's not showing up here. Plus, we've got headline risk. Now, both the the metals and some of the risk-off securities are having a really good rally. We had a beautiful rally in gold last night, and then a beautiful sell-off. I actually, let me just bring this up here. I'll show you. I actually shorted this rate. I shorted this last night for a nice move. This $15 rotation up. This rotation up. I shorted it at 61.60, I think was what I got, and they went up to 62.40. I took some heat on it, but eventually I got I got $4.20 on my runner, but it actually went down 5.70. Even if I would have traded the $13, which is where I normally would have traded it, but because of the session breaking this up, I was waiting to see some failure, and I thought I saw it at the 13.61.60 area, but it pushed up a little bit further. Anyway, really nice move. But more importantly, if we look at the gold on a bigger time frame, you see that gold balanced for the 3 days higher, broke out of balance. Now we're trying to balance above the prior. Oops, I don't want that. I want profile. Now you can see that the 2-day balance is 58 area. We're below that right now. They're likely to come down to this 47 to 45 area one more time, but the idea is that we continue to get price discovery. Now, in a very big picture, and I want to emphasize this. This is a major monthly pattern. So you have to understand that within this monthly pattern, there could be, $40, $50 rotations, but this is a beautiful inverted head and shoulder pattern on gold. And we're basically fighting the neckline right now. And this has got a projection on gold, to go up into the 1550. So that's basically, 200 points, $200 from where we are right now. But it is on a monthly, and a lot can happen in between. But until we break below the right shoulder low of 1124.30, this pattern remains in effect and giving us a nice projected move into the 1550 with the 100% extension all the way up into the 1670 area. So just be aware that this is a major pattern on gold, and the likelihood is that gold is going to continue to move up, especially once this market starts to roll over. We should. And any type of risk event with North Korea is just going to drive the price of metals up. Anyway, I got a little off track on that. Just taking a look at the macro to micro on the ES, I use a simple candlestick chart with a 9 EMA, 20 SMA, and yes, I am getting emails from people. This is my paper money. I do trade live, but I use my paper money on this system because I like the drawing tools, and I get live data because I've got my live account on my execution platform on my other computer. But anyway, good slope, good separation. Price is paralleling the 9 very nicely. We're not even close to violating the trend on the monthly. On the weekly, same thing. We came down and challenged the 20, but we bounced back up, and we're getting the continuation pattern. Going to the daily, you see that we're balancing out in this fat area of the profile. I'll show it to you on the micro composite, but we are above the 9 and the 20. We are challenging the 9 right now at the 58.75. We're seeing a little bit of weakness coming in, so my main hypothesis is going to see a little bit of a dip, testing this key CLVN and possibly dipping down to that 53 area, but we'll talk about that in a minute. On the 4-hour, you can see that we're starting to get a downward trend. On the shorter time frame, intraday, going to the 1 hour, you can see that was accelerating overnight. The inventory overnight is basically about 80% net short in time and price. So I am looking to see some responsive buying stepping in, but ultimately rolling back over and getting this continuation down. Going to the 30-minute, you can see that we are getting some responsive buying stepping in, and we're above the 9 and the 20, so they are challenging the downward trend as we move down in time frames. Again, you can see we're now starting to see a acceleration to the upside. We do have a naked cross down here at 58. That's going to be a key level for us today. Just a word of note, we are still near the all-time highs, and I'm still looking for that equalization of the September high and the December high. and the larger time frame trends are still up. So this is simply an oscillation. And we've got a naked cross up here at 24.63 on the 15 minutes. We want to mark that on our chart. That's going to be a key area for us above. I'll show you why. And going to the 5-minute, you can see that we are in a upward trend on the 5 minutes. So we are seeing responsive buyers stepping in early, coming into this RTH session. So if we take a look at the bigger picture, you can see that we're in this this balance area. Now I've got two profiles here because of the fact that we came up inside of this balance area and took a trip through value, failed to break out, and then they were trying to hold the value here at 67.25. They dipped down, and now they come up and they are trying to hold value at that 63, which is lower than where the seller stepped in to reject it again. So we are seeing the possibility of some continuation to the downside. We've basically been trading inside of this distribution zone, which centers around the 67, which is where the microcomposite VPOC was the last time we balanced in this area. But now we're finding that fair value is coming down a bit, and we're coming and testing a key level, which is that 58 area. If we cannot hold this 58 today, I'm looking for a push down into this 55, 56 area, and possibly come down and take a trip through value down to the 53 to 52 area. 51 is going to be our key line in the sand. So 50 is going to be our over-under. 58.25 is going to be our over-under line, but 51 is going to be our key line in the sand. Anything below that, I think we get a bigger move down towards that 43. Whether it will happen today, I don't know, but I'm expecting some weakness coming in at some point in time today. So if we take a look at the overnight inventory, the overnight profile, you can see that we opened inside of the prior day RTH session. We failed to break above that 67. Sellers stepped in, took us right through value down to the value area low. They tried to buy, they failed. They tried to buy, they failed. They broke out of value, and we broke out of the prior day, and now we're get a shift of the VPOC down to that key level at 58, and we're fighting the prior day range low, and we've dipped below it to that 55, 56 level already, and have come back up, but we're trying to hold now. So if I take a look at, and the inventory, by the way, is 80%, 80 to 90% net short in time and value. You're getting a bit of a B-shaped profile right here. So if I take a look at our levels, we have an overnight high of 65.75. A couple ticks above the close, which was at 65. Our overnight low is 55.25. So basically, just a little more than a 10-point range in the Globex. Our overnight low is 55.25. And our overnight VPOC is not likely to change, 58, which is basically sitting right on, which is now going to become, it's no longer going to be the key line in the sand. It's going to be lower. It's going to be our over-under line. Bringing up the wrong one. Hate when levels overlap. Okay, and in terms of levels, we've got an LVN right here at the 61. Remember how difficult it was, between that 61 and 63? I'm actually going to use 63. That's going to be a key trade area for me. Where I'm looking for possible failure is between that 60 and 63. We've spent a lot of time in the last 2 days. And then obviously we've got the overnight high at 65.75. I'm actually going to watch the 65.25. The microcomposite VPOC is still up here at 67. So that's going to become a trade level for me. And I don't often use HVNs for entries, but in this circumstance, I'll be looking for failure at this level, so I will react to that. And if we do break through, I'm targeting the 69, 70.25, actually 70.50, and then we've got the 72.73. Nothing changes. Our 20-period daily ATR is running at 1993, so off of the low overnight of 55.25. Our upside daily ATR target is up here at 75. Our downside daily ATR is down here at 45.75, with our September low at 43.75. Next big target below 41.50. Critical mass for today. The upside on critical mass, weekly critical mass, is all the way up here at 80.25. I don't think it becomes a factor, but I will be watching critical mass down here at the 40.25. And our ATR for weekly is all the way down still at 34.25. Our weekly ATR is running 35.175, and off of that 69.50 week high takes us all the way down into the 34s. So what is my main hypothesis? We're going to fight. We're going to be opening just inside of value, or actually, let me get my levels to the downside. I'm sorry. I'm trying to do this quickly because I ran late. 56.50, and then 55, and then 52, and 52 is going to disappear now, and the key line in the sand is going to be 51.25. And the target just below that is going to be 49.50, with ultimately looking for a move down into the 43 to 45 area. So hypo 1, open auction, just in range or just out of range. Responsive buying up into the 61 to 63, chop around here, maybe a push up to close the gap, but ultimately putting in a lower high and rotating down towards this 53. Maybe even down to test the key line in the sand at 51. That is hypo 1. Hypo 2 is an open auction just in a range, a false breakout, or a push down to the 53, then find buyers, rotate us back up, and basically come up here and chop between 63 and 67 and go sideways into the prior day. Hypo 3 is an open test drive, failure to take out the naked VPOC, fail down into the 56 level, chop around here, then push down and fight this 51 with a possibility of a late day probe down into the 45 to 43 and possibly put a new September low in. And that hypo 4 is a open auction in range, failure to break out or a false breakout, but finding responsive buyers right away, coming up, chopping between the 63 and 67, and then getting a late day probe up into the 70, 50 to 72, and then fail and come back and close somewhere around 67, 69. That is hypo 4. And the alternative hypo is we fight the range low and go sideways with a 6 to 7 point range. Unlikely that's going to happen again. We are creating some energy to break out of. So I am looking for a move out of this balance. And a good thing to watch would be just to, whoops, don't want to move that, to watch that Tuesday high and low as, any serious trend day breaking in either direction. If we get below 43.75, we could end up with a pretty big trend day to the downside. If we get above that 69.50, we could end up with a pretty serious trend. I don't think we're going to go that far today, but I'm expecting a little bit larger range than yesterday. Anyway, that's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.